those lines. And as I understand it, the Supreme Court is considering that. We'll bring you live updates as and when we get them. There's also a separate case related to the GST and the jurisdiction of the GST Council and how that plays out. But again, we'll get you more information on that. For now, let's start with the viewer queries. We've got several that have already come in. The first one comes in from Nayan Gandhi. He's writing in from Hyderabad, and he's asking Kunal about Neogen Chemical. He's asking whether he can get in at the current market price. His view is for the next 3 to 5 years.
Well, I would suggest and avoid. The reason for that is the last 4-5 months of charts indicate that the stock had gone into an extremely overbought territory. So, couple of 4-5 months back, the RSI for the stock had hit back towards 85, 88 levels on the monthly charts. That generally indicates that the stock can get into at least a 6-month to 12-month kind of a price correction for itself, or either a 30% to 40% correction from its previous major highs. I would suggest and avoid expecting the stock to correct by at least another 10 to 15% over the near term from current levels.
All right, we now have confirmation of that breaking news. The Supreme Court has in fact ruled that the GST Council's recommendations are not binding on union and state governments. Remember, in the process of the setting of rates, the GST on various slabs, on various commodities and services, you have the GST Council that meets up very regularly and makes rates or decides rates. In fact, we had a story not too long back that talked about the possibility of the highest slab being imposed on horse racing, on online gaming. Now, what the Supreme Court is saying has major repercussions, seemingly, because it is saying that the GST Council has only persuasive value in terms of the recommendations that it makes, and Parliament as well as state legislatures possess equal powers to legislate on GST. This is what we have heard from the Supreme Court. We'll find out what the implications are because clearly we have to understand the legal nature of the statement by the Supreme Court and the implications. At least prima facie, it seems that it is now very clear that the GST Council can only make recommendations to the state as well as to the centre, and ultimately the power to decide on the course that GST will take, or even the rates that fall under the GST will be decided by both the centre and the state. We'll get a few experts to come in and to give you more details on that. In fact, this is going to be something that has to be studied quite significantly. But for now, let's turn to something else. In fact, let's turn back to our queries. We've got Hariharan from Trivandrum who's writing in, and he's saying that he did not apply to LIC through the IPO, but he's asking what a good entry level would be. This is an interesting question, Mr. Prabhakar, because we were asking experts ahead of the listing day if there would be a decline in LIC shares, should retail investors consider picking it up? What's the view?
Cannot answer this question because of due to compliance procedures which we follow, because we belong to IDBI group which is owned by LIC, so I won't be able to comment this question. Thank you.
Fair enough. Thanks for that clarification. All right, let's talk about Relaxo footwear then. I know it's on the complete different end of the spectrum. We're moving quite quickly across sectors, but let's talk about Relaxo footwear. We've got Pavan Kumar who's asking about this. Mr. Prabhakar, is this a good idea to accumulate?
I think if there is a 15 to 20% correction, then accumulation will be good, because this quarter, if you compare quarter-on-quarter basis, the sales has come down because we cannot compare last year's quarter also. But there is some problem. The sales is not happening as we would like it to be, and this is the most expensive stock to trade also. Trading around 107 trading P. So I think it is better to wait and buy. It is a wonderful stock for a long-term purpose, but as we are in a corrective market, it is safer to enter at a later point of
time. Akhilanand is writing in from Bengaluru, and he's holding on to Renuka Sugars, 200 shares, which he's bought at levels of 60. Can he add more for the long term, which is the next 2 to 3 years? I will go to you on the fundamentals, Mr. Prabhakar. What would you say about this counter? Or would you pick something else? The ethanol story is clearly something that is brewing.
Yeah, no, Renuka Sugar has been consistently loss-making company. So loss-making company normally we don't recommend. So we like Balrampur Chini, Tiruveni Engineering, or EID Parry, which are generating a lot of cash, and they have a very good ethanol capacity. So I think these three are better picks than Sri Renuka Sugar at this point.
The next question is for you, Kunal, and this is on Axis Bank. We've got a question coming in from Puneet. He's bought at levels of 655 and he's looking for an intraday view.
Well, from an intraday perspective, I would believe maybe 658, 660 on the spot levels for Axis Bank could be a major resistance. That could probably also let the stock fill in the gap, which it has created today after the gap down opening by almost 10-15 points for Axis Bank. But I don't sense that the stock could recover beyond the 660 mark, at least on an intraday perspective. So if you happen to see the stock closer to 658, 660, and if it's purely intraday kind of a view, then you can look to book out profits in that range.
Okay. Yogesh, Mr. Prabhakar is asking about Nestle at the current levels. Is this a good investment to make for the medium to long term?
I feel so. No, if you take Davies milk product, they have almost more than 90% market share. So they have a niche product. It is a bit expensive stock, but it will remain so because of the kind of growth they can generate and the niche, the pricing power which they can operate. So any correction would be a better opportunity. But at current level also, if you are a long-term investor, 3 to 5 years, you can buy Nestle.
Understood. I believe we have Mr. M.S. Money who's joining in, Senior Director, Indirect Tax at Deloitte, India. Mr. Money, could you help us understand the implications of this? As we understand, the Supreme Court has ruled that the GST Council's recommendations are not binding on the union and state governments. Help us understand the context and the implications of this.
Okay, so couple of things we need to understand. I haven't had a chance to see the decision yet because I believe it was just pronounced. So ideally, we should wait for the decision and read the decision and then comment on it. But at a broad level, what you need to understand is the fact that this is possibly one comment which has been made in course of a decision, a very landmark decision that the Supreme Court was hearing today. It is in that context that this comment has reportedly been, made. And as I said, I haven't seen it. But the way I look at it is, when we are approaching the 5th year of GST, in just maybe a month and a half, we'll be completing 5 years of the legislation. At that point of time, if we are told that the GST Council recommendations are merely recommendatory or they have only persuasive value, it is going to create a lot of difficulty for businesses. Because I'm looking at it from the perspective of various businesses that are impacted. And over the last 5 years, in order to streamline GST, stabilize GST, rationalize rates, ensure that the IT system works, there are several decisions taken by the GST Council. If some of those decisions are going to be relooked now or re-evaluated now, it is really going to become very, very challenging for businesses which are just recovering from a pandemic and, a demand reduction. This is a stage where the tax policies and tax laws should be supporting all businesses to grow back to their earlier double-digit growth figures. So that would be my take on what you mentioned just now.
Are you familiar with the context, though? Because I believe this has to do with a particular state and an IGST, being quashed with regard to a particular service. Are you familiar with the context as to why this came about?
Yeah, so this is in the context of a decision that the Supreme Court was hearing today, and this has been there for quite some time. And in that context, the Supreme Court, I believe, among many other observations, has made a comment by saying that the GST Council's recommendations have persuasive value and they are not mandatory on the legislature.
Thank you, Mr. Money, for joining in. Okay, I believe we have Mr. T.P. Oswal also joining in, who is also a tax expert. Mr. Oswal, We just had Mr. Money explain certain things to us. Of course, I'm guessing that everybody is waiting to read the judgment. But prima facie, what are your initial reactions to this? What are the implications?
Prima facie, GST Council was in any case recommendatory power, and Supreme Court has reiterated that. I believe ultimately the Parliament and the state is only final authority to approve it. But so far, Mr. Jaitley's framework was such that whatever GST Council will say, will follow that. However, the interesting twist has now come after the Supreme Court decision. Whether a particular state want to really deviate from this is possible for them. Let us see what will happen. We have yet to get the decision of the Supreme Court.
So, Oswal, once we do get that decision, but clearly from what our experts are saying, this could create certain problems going forward in terms of the collaborative nature of GST. Let's move back to queries, and quite a few of you have been posting your queries while we've been speaking, but let me take the first one from Muhammad Nihal. He's asking about the edible oil situation and prices going up. What are the implications for companies in India, input costs? We were talking about this a while back, Mr. Prabhakar, with regard to ITC, but I think a few other FMCG companies will be largely affected by this, more so than ITC. What are the implications and how does one understand this?
See, for many companies, it is an input. For Hindustan Unilever, Godrej, this is an input. Palm oil is a major input, and that will have a very big impact on their margins. So already we are seeing it. So oil prices rise. No, it has already impacted. Now, if it is a cooking oil, what you are talking about, and if it is a crude oil, yes, and that is also a derivative which is used in shampoos, and a lot of other things. So both oil increasing is something where margin impact is there. And when you see the sales would have gone up, but it is due to inflationary pressure, not really in the volume growth. But I think margin pressure is where ITC has escaped, but many FMCG companies have had to pay a price this time, and it is very volatile also.
All right, the next question is coming in from Sudha, and she's asking between two companies, Dwarikesh and Triveni Engineering. Which would you pick, Kunal, based on how the charts are showing?
So I would probably prefer, Triveni Engineering, even though both of the charts are very, very similar for themselves, but then Triveni Engineering has that slight edge with itself, lesser volatility into the stock price. The stock is above its, 50-day moving average as well. Of course, both the stocks are above their 200-day moving averages, but Triveni has that slight edge for itself with respect to, Dwarikesh. So I would go with Triveni.
Okay, fair enough. We've got a question coming in on India pesticide and let me just take it on Sham Metallic. Sayanta Chatterjee is asking about this counter. He's asking only for the next few days, Kunal. What would you suggest that he should do?
Well, depends on the positions which you have. If you're holding out from maybe lower levels, and I think it's a good sense to try and take out profits over here at 329, 330 levels where the stock is trading. The stock is still reeling below its 200 DMAs and the short-term moving averages for itself. So no major signs of picking up of trend, at least over the very near term. Would suggest an avoid or an exit or a sell depending on your cost price.
Okay, Sagar has bought 7,000 shares of PI Industries in futures at 2,500 levels. Do you see targets of 2,800 at this point, Kunal, or do you think that it would make sense, whether it's wise to book profits at this point?
I think what's actually happening is many of these pesticides and agro stocks over the last 3 to 4 days have done remarkably well. Today, for example, you've seen RCF also looking quite strong. PI Industries from the start of the day as well has looked quite robust for itself. So chart-wise, even if the markets are a bit sluggish, these stocks are the ones which are riding on high momentum. That indicates that whenever the markets get into a stable phase and if we get into even a gradual recovery, these stocks, they can make a strong comeback for themselves. So I would expect PI Industries to head towards 2,800, but provided the markets have to remain a lot more stable than what we've seen in the last couple of days.
Okay. Mr. Prabhakar, we've got Sushil Kumar who's writing in from Trichy in Tamil Nadu, and he's asking about BHEL, which he bought at 76 levels about a year ago. And he's asking whether to hold on to this or average his position.
BHEL no, has been consistently loss-making and their revenues have been coming down. So, no, I think BEL would be a better bet where the growth is consistent and their margin expansion is also seen, and they have started to export to other countries. So, BEL will be a preferred pick than BHEL.
We've got Tube Investments, which is the name of the counter that Emmanuel wants to know about. He's asking what the best price is, Kunal, to enter for a 3-year plus time horizon.
So on the monthly charts, the stock is into a bit of an overbought kind of a zone now, even though it's not corrected as sharply as many of these other mid-cap names have done over the last maybe couple of months, 3 to 6 months for itself. But I would wait out for the stock to get into a correction phase. Maybe another 20% down from current levels, say closer to 1400 odd mark, could be a good level where you can look to enter.
Okay, another one coming your way. This one's from Nino Kuruvilla, and he's asking about Titan. Titan at the current market price. Of course, it's been in focus in the recent past on the back of its earnings, but on the charts, how does it look?
Well, I would suggest an avoid. I think there are many indicators on the monthly charts and the slightly higher time frame charts which have given a breakdown of sorts for the stock price. So what could actually happen is that the stock may give you those periodic rallies in between, or a bounce in between, but those bounce may be short-lived and you might see the stock making a pattern of consistent lower lows for itself. So I would suggest an avoid.
Okay, Mustafa is writing in from Kashmir, and he's asking about Coal India, which he's bought 600 shares of at levels of 187. This one's for you, Mr. Prabhakar. He's got a long-term view on this stock. He's asking whether to hold on.
See, at this level, Coal India is looking attractive, but if you want a secular rally, Coal India might not be the right candidate, because we need to understand the employee cost is one of the highest in all the PSUs put together. So the mining business normally has a margin above 50%, whereas Coal India doesn't enjoy that kind of margin because of the employee cost or mismanagement of employees. So I think Coal India, yes, at this price it is looking very attractive, but if you get 20-30% upside in next 1-2 years, then you need to take an exit. It is not going to be a secular rally.
Let me take Mohit Garg's question, and let me just see if I can pull up the chart as well. He's asking about Hudco, which I'm hoping that you have a view on, Kunal. He's got a significant holding of this. Hudco, he's bought at levels of 52 and he's losing ground. He's holding about 30,000 shares, he says. What should he do with this?
Well, it's tough because the stock is now almost at 33, so you're losing a substantial amount over here, more than 30% on your investments. But I think it's time enough to try and take this call that do you want to hold on to a stock which continues to struggle from a longer term time frame, or you would probably want to look at reinvesting your money into some other quality large cap names. I believe that the latter should actually work out to be a better strategy. I would suggest an exit on Hudco and look out for large cap names at current levels which are available at significant discounts and good quality stocks.
All right, with that, let's kickstart with the rapid fire. I have missed the most part of the query segment. Nevertheless, let me take this one. Kunal, Sangeeta wants to know whether we can enter DMart currently.
Well, I would suggest that if you are looking at a staggered buying, then you can start at current levels of 3,500, but then keep some powder dry for another 10% correction. That could be a good level we can average further.
Mr. Prabhakar, we've got a question on Pidilite, and this one is coming from Mark. He's asking whether he can buy the current levels and what your target would be for 3 to 5 years.
3 to 5 years, it is a very good stock, but we need to understand in this correction, all high PE stocks are correcting. So let it correct 15-20%, then start accumulation.
Right, this one is from Aditya, and Aditya wants to know whether it makes sense to enter Shakti pumps at current levels. Kunal.
Well, I would suggest an avoid. The stock is still getting into a downward trend, still below its longer term averages. Would suggest an avoid.
Okay, CEAT on the fundamentals. We've got Asha, who's got 430 shares at levels of 1,186. Mr. Prabhakar, what should she do with this?
see, now tire business will take time, so hold on for now. It will take 2-3 years for recovery.
Siat is the name of the counter, not Sierram Silk. Yeah.
All
Yeah.
right, this one is from Mubarak and he wants a view on Sigachi Industries for the long term. How does this one look to you, Mr. Prabhakar?
We like this stock. I think one can hold on to it.
Okay. Tata Steel, Tata Metallics, JSW Steel, all counters that are sliding. Would you say that you should wait, Mr. Prabhakar, before you take a position in any one of these for the next 9 to 10 months?
Yeah, commodity is a cycle. So if internationally the prices are starting to go down, I think we will have some correction. So it is better to wait and buy Tata Steel or any metal stock for that matter.
Okay, Dheeraj wants to know what should he do with Tejas Network. Unsure whether he's purchased the stock or he's looking to do so. What's your take, Kunal? How does Tejas Networks look to you?
Well, chartically looks quite okay. 400 is a good base for the stock. So if you're looking to buy, I would suggest the closer you are towards 400 mark, the better it is in terms of risk reward to buy.
Mr. Prabhakar, you had a buy on ITC, correct?
Yeah.
Okay. All right. Well, that brings us to the end of this query segment at least. And gentlemen, thank you so much for taking the time. Kunal as well as Mr. Prabhakar, appreciate the time that you've taken and the questions that you've answered. For all those of you that have not had their questions answered, well, we only have so much time, unfortunately, but we'll be back tomorrow to take as many questions as possible, so do stay tuned. We have to slip into a short break. There's more on the other side.
Paradeep Phosphates Limited now makes a public offer of equity shares of face value of 10 rupees each. The 100% book built offer being offered in a price band of 39 to 42